The UK is holding a general election on Thursday, June the 8th, with results due overnight between June the 8th and June the 9th. This could have a significant impact on trading in sterling pairs as well as in the UK markets. Since the last Brexit vote a year ago, we saw that the pound initially got crushed, but at the same time it ignited a rally in the FTSE. And since then, for the most part, we've seen the FTSE and sterling trending in opposite directions as we've seen the ups and downs of the Brexit process unfold over the last year. More recently, what we've seen is that a movement towards Brexit or anything that supports the government's negotiating position has been bullish for the pound and bearish for the FTSE. We're certainly seeing that in today's trading action, where we have sterling against the dollar cable rallying back up above 129, and we're seeing the FTSE actually start to break down. The reason for this is it's the currency that's driving this. It's the big sell-off that we had in sterling after the Brexit vote in 2016 ignited a big rally in the FTSE as well as in the UK economy. Why? It gave the UK an unplanned currency devaluation, and so what did that do? It made UK goods cheaper abroad, and it also, when you look at stocks in the FTSE, there's a lot of big global multinationals. So all of a sudden, when the sterling collapsed, it made the UK multinationals a lot cheaper in sterling terms, and then relative to their listings in other countries and relative to their peers. So we saw those stocks in particular take off and to reach their more adjust against global valuations. So what we're looking at now is that we've seen over the course of the campaign, polls showing the Conservatives trending well have boosted the pound. Polls showing Labour doing well or the Conservatives struggling have undermined the pound. We've then seen the FTSE go in the opposite direction. So we could see that continue to play out in short-term trading over the next few days. The key is going to be, how well do the Conservatives do? Do they maintain where they're at with a small majority government? Do they increase the majority? Do they lose their majority potentially? And does that then mean a coalition government or potentially a Labour win? Now that's a pretty low probability, but still, overall, the polls heading in have varied. There were weekend polls that showed varying Conservative leads between 1 and 12%, with an average of about 7 percentage points for the Conservatives we've seen over the last few days. And we've seen varying models as well. We saw a model from Lord Ashcroft suggesting the Conservatives could win a 64-seat majority. We saw a model from YouGov suggesting that we could see a very close race on seats. So there's a number of factors here that could play into it. But primarily at this point, what it looks like is that the bigger the win by the Conservatives, the better it would likely be by the pound. And that's why today we're seeing that in the last 2 days, as polls, we had this one sell-off here in late May that was where we saw polls suggesting it was really, really tight and that the Conservatives could lose their majority. However, as we've seen more mixed polls with some showing a tight race and some showing a big Conservative lead, we've actually seen sterling continue to recover and advance heading into the election. So a big Conservative win could push sterling up above 130. Recent resistance in the May peak was in and around 130.40, and then the next resistance, a Fibonacci level, up around 131.50. If the Conservatives were to lose seats or to lose their majority, we could see a moderate decline, perhaps back towards this Fibonacci level and the 50-day average in and around 127.80. And there's a very, very tiny chance, I think, that you could see the Conservatives lose the election, where either Labour and the Liberal Democrats form a coalition or Labour forms a government. These are very, very small percentage outcomes. However, if we did see them, it would probably be pretty devastating for the pound. So that's important to consider as we're going forward. Small chance, but high impact. So overall, though, what we're looking at here, we're seeing the pound recovering heading into the election. We're seeing the FTSE rolling over here. It's broken a rising wedge. We had a negative RSI divergence here. That's a sign of slowing upward momentum. Something else to consider when we're looking here at the market. This table here shows prior to the Brexit vote last year, we generally saw that cable and the FTSE were trending in similar directions, more or less. Since after the vote, however, we've seen a huge gap widen out between the two, where losses by the cable were offset by gains in the pound. So this is showing this as well. And then when we look here at the FTSE, it's quite interesting, where we have had a 20% return in the UK index over the last year, but once you adjust for the declines, we've actually seen a lower adjusted return on a currency basis, rather than the high performance we've seen of the DAX, the Dow, and the Nikkei. The performance of the FTSE after accounting for the currency has been more in line with resource markets such as the Canadian and Australian markets. So that's something else to consider as we move past the election and start going forward. What does this mean going forward? What does it mean for the government's negotiating hand? What does it mean for corporate earnings in the UK going forward? We've had a huge surge in UK economic activity, but as we move into the summer, we start to lap tougher comparables. So there's a number of factors here at play that could have a significant impact on trading, both in UK currency as well as UK stocks in the coming days and weeks.